Good morning, good day, good afternoon. This is Wolverine broadcasting out of Ann Arbor, Michigan, US of A for the Salvation Trading Company, where we teach to trade Forex with realistic outcomes using proven price indicators and cross-pair analysis. At any time, you're welcome to come to our website at www.salvationtrading.com. And there you can review all of our previous week screenshots on trades, both positive and negative, and look at those in detail. And you can then also see the PIP tally, positive and negative, for the month and for the year. And you can also see our PIP tally on our weekly analysis, weekly trade suggestions for position trading traders as well. Okay, so let's get into a highlight of a trade that we've taken during the week of January 11th, January 9th. So on January 11th here, you can see we traded the euro dollar in a trading a scalping method of using the 1-minute MACD, part of our channel break trading strategy that we use. Now this is using the 1-minute MACD. We also have a daily trade suggestion, which produces a little bit more pips. The 1-minute MACD is designed to produce 10 pips plus. Our daily is designed to produce a 20 to 25 pip plus, and our weekly channel break strategies are designed to produce 80 to 150 pips plus. So, and all of them use the same indicators. And so what we use here are 3 indicators. Again, we've been doing this for 14 years, and I have honed this down to being able to trade using 3 indicators, the minimum amount of indicators to produce the maximum amount of pips and the highest probability in doing this. So if you follow along real quickly here, you will see that one of the indicators we use that's free from your broker is just using and knowing where your trend lines are at. So we have a 5-minute trend line, this blue, and then we have a 1-minute trend line, this orange line, which gives us the general trend, the market sentiment here, and the trend now for this particular pair. Now this is taken during the U.S. session, is to the short side on euro dollar. And in this case, so we know what the sentiment of the market is, so we're going to trade with the trend, okay? And this is a short opportunity right off of known resistance. And that's the other indicator that we use. Again, this is an indicator that I give out to you every day, 24 hours in advance, to actually price even being here. So these are our resistance and supports, and this is where the market is likely to hold its channel and break its channel eventually. And the idea here, and what's key to making this trade successful, is finding the right indicators that show us when we have momentum that we're going to break a previous channel, which is up in here, and move to the next channel, which is down here. So here's the resistance support level at 26.95, and our next support level is down at 26.65. And you can see how the market held the initial channel barrier, broke that support finally, and came right down, tested it as resistance, and then came right on down to where? Right to support. And again, this is not a number we put in afterwards. This is a number that was already predetermined where the price is going to be stopping. So how do we trade this channel? Again, using these indicators, we know we have our trend lines. I've already provided all of my clients resistance support levels where we're likely to find these prices to stall. The next key indicator is the MACD. So the MACD, basically, of the MACD gives us the momentum of what's currently happening. These are 1-minute time frames, so we're looking here for the MACD to show us when we're likely to actually be able to break this channel by knowing when sellers are starting to come into the market. And the best way of doing this in a logical manner is use our rules of engagement. This is a checklist that I send all of my clients as well. So the first thing we do is, are we trading with the 5-minute trend line? Well, yep, we've already identified that we are. And is price testing known resistance or support? Yep, we identified that too. There's that 26.95, and you can see momentum is turning short above the predetermined resistance at the 26.95 area here. So price came down, couldn't break through, came back up to test it as resistance, and just came right above, and then the banks took it right back down because resistance is going to hold. And how do we know that this is a good likelihood now of shorting? Well, we go to our next checklist, which is the 1-minute MACD converged at extremes or testing the zero line? Here's the zero line, sometimes called the neutral line, and you can see momentum has moved down below it and then come back up just as price came to test resistance. It's what we call confluence of indicators. We also have momentum coming up to the zero line but not being able to break through it. In fact, we have our red line, which is our fast moving average, red line, and then it is converged here. That's part of one of our trigger elements, and now it is crossing over, another one of our trigger elements, and then it is starting to diverge, which is our third trigger element that we look at, and it's crossing over our slow moving average, which is the green line. So the convergence, crossover, divergence at resistance. It's all about confluence of indicators, and you just watch it all come together, and once it comes together, your probability of a successful short trade becomes ever so greater. So we've identified that we're crossing over the slow moving average. We have no high impact news coming out, and the last question is, do you have cross pairs fueling the trade? Well, on Eurodollar, what we have here is our dollar Swiss is moving long. Dollar Swiss move long. That will help fuel the Eurodollar short. We also have the Euro Sterling shorting, which will help fuel the Eurodollar short, and Aussie dollar shorting, which will fuel the Euro dollar short. These are that is all explained in our training sessions as well, and you'll see how that works. And that gives us that one last piece of the clue that we're looking likely to short here. Okay, so you can see we don't use any go, no-go gauges. There's no red light, green light systems. This is all about how the market actually works. Okay, so when this is raw data, this is how the market works, and this is how the banks trade, how hedge fund companies trade, and so this is how we should be trading as well. No gimmicks, no magic boxes, no magic bullets. This is real-time, realistic trading. All right. Now, to protect yourself, even though it's a high probability trade, when we get into a trade, we put a 10-pip stop loss plus our spread. All right, because there's no guarantee that just because momentum, and we have an indication that we have more sellers coming into the market than buyers here by watching this divergence to develop, the separation of the fast-moving average and slow-moving average on the MACD. No guarantee, but it's a high probability. So here's the real-time trade call. We got into this Eurodollar, 26.92, and with our stop loss, and we protect ourselves with our stop loss, and then we watch price come right on down, where I always recommend taking a major position off when you get your 10 pips in your spread. So I take 70% of my position off and move my stop to break even. All right, take my 11 pips. Now I've covered my trade. I protected myself as well, and if momentum continues to short, then it's a bonus for me. And here, sure enough, that's what happened. We continued to short. Price came right down to where? Oh, right down to predetermined support area here towards 26.65, where price started to stall already. So, but we can confirm that stalling by seeing that the MACD line, the fast-moving average, is already turned back up. And as soon as that turns back up, that's when we look at getting out of this trade, because we have this movement stopped, stalled, and the fast-moving average is now turning back into the slow-moving average. Time to get out of the trade, and that's how you take your rest of your position off, and you're able to pick up a quick 23 pips. We started that trade at 9:53 and got out of the trade at 10:08. That's how fast it was to pick up 23 pips just by watching these quick indicators. All right, so that's the scalping method. Please feel free to come to our website, join us for a 10-day free trial. You get into live webinars, all our webinars are the first 2 hours of each trading session every day. All right, you can also again review all the screenshots at that website. Love to have you there. Love to show you, and stay tuned. Please feel free to tag this as a subscriber on your YouTube, and then you will automatically get more screenshot follow-ups and training modules at no charge. Thanks for your time. God bless, and hope to see you in our trading room.